Hey guys, so I think everyone has seen that it has been quite a rough couple of months for the electric vehicle market, and NIO is no exception to that. Despite continuing to increase their deliveries every quarter and improve on their fundamentals, NIO stock has dropped quite significantly from its all-time highs. The stock is now down over 40% from the highs of around $65 made back in February and is currently trading for around $40 per share. Now, with a market cap of around $65 billion, NIO stock is on quite a big discount to where it has been trading before. I believe that NIO is still in a fantastic position to secure a sizable portion of the Chinese electric vehicle market and is likely to be a much larger company in terms of vehicle deliveries in a few years' time. So is now a good time to pick up some NIO shares at a discount, and how high can I see the share price going? In today's video, I'll be taking a look at why NIO has fallen in recent months, why NIO is still in a great position today, in my opinion, as well as what my thoughts are on buying NIO stock at the current price. Just before we get started, if you do enjoy this video, I'd really appreciate it if you left a like, as that does help out the channel a lot. Also, remember to subscribe if you'd like to see more videos similar to this in the future. And apart from that guys, let's get right into it. So let's start off by taking a look at why NIO has dropped in the past 2 months or so. So the reasons for the sharp fall in NIO's share price is not anything to do with NIO directly, and in my opinion it's not particularly concerning. There has not been any significant bad news or changes to NIO's fundamentals that have spooked investors into selling. Instead, the reasons for NIO's recent poor performance is in relation to wider market trends that have affected a number of other stocks as well, including many other electric vehicle stocks out there. Many electric vehicle stocks increased massively in 2020, including NIO. The share price for many stocks has far outpaced the improvements in fundamentals, and these EV stocks were probably due a bit of a cool-off, and it probably is quite healthy that it has happened. There has been some widespread rotation out of EV stocks and other high-growth and speculative stocks, with investors rotating their money into value stocks and recovery plays. So on top of this, a global semiconductor shortage crisis caused many companies to reduce or suspend their production for a short period of time, and NIO did get caught up in this as well. So due to the global pandemic, people around the world have been stocking up on electrical equipment like computers, laptops and games consoles in order to work from home and stay entertained during lockdown, which has caused a shortage in the supply of semiconductor chips that are going around. Semiconductors are an important component for electric vehicles, and due to the shortage in global supply, NIO were forced to suspend their vehicle production for 5 working days. So this has also contributed to the slump in price. However, I personally believe that this is nothing to be concerned about long term, and is something that NIO were pretty powerless in. As a response to this, we are starting to see semiconductor companies ramp up their production and expand with new factories and production facilities in order to make sure that this doesn't happen again in the future. So now let's take a look at why NIO is still in a fantastic position. So NIO achieved 7,257 vehicle deliveries for March 2021, an impressive 373% increase year over year. This took their total deliveries for the first quarter of 2021 to 20,060, a 423% increase year over year, and a 15.6% increase on the 17,353 deliveries that they achieved in the previous quarter. So NIO are increasing their deliveries every single quarter and are showing very encouraging and consistent growth. An analyst called Vijay Rakesh believes that NIO are on track to achieve 87,000 vehicle deliveries in total for this year, with deliveries continuing to grow rapidly over the next few years. He does predict that NIO will reach 141,000 deliveries in 2022 and 223,000 in 2023, suggesting impressive year-over-year growth for NIO. NIO recently showed off their upcoming ET7 luxury sedan at the recent Shanghai Auto Show, and also announced a new plan to increase the availability of their recharging stations and battery swap stations. Now, this 3-year plan includes adding 100 new battery swap stations, 500 power charger stations, 120 power mobiles, 2,000 power chargers, and more than 10,000 destination chargers across the whole of China. So the aim of this plan is to make consumers feel less stressed out when it comes to finding a charging station or a battery swap station, with the goal being to have at least one station for every 60 miles on highways. For me, this is very encouraging to see, because I think when it comes to buying an electric vehicle, If you're thinking of driving on long journeys, it is very important to know that your car that you have doesn't have to keep stopping to recharge the battery or to get a battery swapped out. And by having more charging facilities and battery swap facilities across the whole country, this makes consumers feel more confident in buying a NIO vehicle because they know there are a lot of facilities around the country that can help them to charge their vehicle when they need to. So electric vehicles are the future and will eventually phase out traditional ICE vehicles. China have the largest car market in the world, and by 2035 it is predicted that 50% of all brand new car sales will be new energy vehicles, with 95% of these being electric vehicles. NIO are in a great position to secure a significant portion of this Chinese EV market, especially with the numbers they have been putting out recently, showing very good signs of growth. So it's also important to remember that battery swap technology on its own is a very important function of NIO vehicles and does give them a significant competitive advantage over other Chinese EV companies. Over 1.4 billion people live in China, and many of these people live in highly congested cities. Because of this, a large portion of China's population live in flats, meaning that they have only one parking space a lot of the time and no personal garage to use for themselves. Having a home charging station is therefore simply not an option for the majority of Chinese people, meaning that their only alternative would be through public charging stations, which is very inconvenient. The battery swap technology is therefore very appealing to a lot of Chinese people, and it allows all people who live in the city and in a flat in the city to simply swap out their battery in a matter of minutes at a nearby station. They therefore don't have to worry about not having home charging access or having to charge up for hours at a public charging station. One thing I will say though is that despite the significant slump in the share price for NIO stock, it is important to remember that NIO is still a hyper-growth company with quite a rich valuation based on the current deliveries and revenue at the moment. NIO is set for huge growth in the coming years and has a great chance to become one of the major EV players in the Chinese market. However, there are still a number of risks associated with the company. Being a Chinese stock is generally considered to be riskier than a US stock due to the different accounting practices and other sort of legal and legislation differences between the US and China. Also, even though I don't believe that the semiconductor shortage will be a long-term problem, there is still a bit of uncertainty around this issue, and it is possible that in the future we could potentially see another shortage of semiconductor chips, which could cause a further production suspension for NIO. So overall, I believe that NIO stock has dropped in price mainly because of external and market-wide reasons that are not directly related to NIO as a company themselves. And as I've discussed in the video, there are a lot of good things about NIO and a lot of things that could potentially propel their price further into the future. I think they are in a great position right now, and I think the share price drop that has happened in recent months means that they are quite an attractive stock to buy for me right now. Obviously they are quite a high risk company still because they are a hyper growth company and there are some risks associated with them as well. But I do believe that the price of NIO stock is going to increase a lot over the next 12 months or so, and I can definitely see the stock price going back above the previous all-time highs of around $65. So that is all for today's video, guys. I'd just like to remind everyone that this video is for purely entertainment purposes only, and I'm not a financial advisor, and this video is not financial advice. Please make sure to do your own research before you think about investing in a company. So with that being said, please remember to leave a like on the video if you did enjoy it, as that does help out the channel a lot. Be sure to subscribe if you'd like to see more videos similar to this in the future. If you want to get $10 of free Bitcoin, be sure to follow the Coinbase referral link in my description below, as that does get you $10 of free Bitcoin when you deposit $100 or more. I will also get $10 for free as well, so you'll be helping out the channel in that way. Drop me a comment, let me know what your thoughts are on NIO stock at the moment, and apart from that, guys, thanks a lot for watching.